All right, welcome in. I'm going to try to not waste too much of your time, so let's get right into it. If you couldn't tell by the title of the video, we're going to be talking about highs and lows, and pullbacks are included in that because pullbacks make highs and lows. So here's the 4 questions we will be getting answered. What is a high/low? What is a pullback? What is a failure high/low? And what is a responsible high/low? All of these are going to be very important to have your definitions down on. There will be some advanced nuances down the road within the details of these highs and lows. For instance, fractal highs and lows, or anchoring from one high on one time frame to another high on a different time frame. There will be lots more to discuss on this, but this is just to get the basics down of highs and lows because I want to put this to rest for everybody, and I also wanted to take away any need for you to go elsewhere for candlestick structure or for high-low and pullback structure. So let's just hop into the first question. What is a high and a low? The answer may seem pretty obvious, and once you see it, it is, but at first it's a little bit confusing. So obviously we can recognize that we have a low here and we have a high up here. And on the way up, it looks like we do get some highs and lows in between. But how can we tell what is a valid high and low in the space between? First thing we got to do is zoom in and kind of get down into the finer details of the data here. As we're climbing up from this low down here, we can see that this candle puts in a significantly higher point right here. Does it make it a high just because it went up higher than the other wicks? No. This candle does not become a high, a valid high, until the bottom of it has been closed below. In order to establish a high, the candle that makes the highest point of the leg needs to get closed below. Meaning, let's say that we didn't get a closure here, and then let's say that this candle went higher than this one, we would now be waiting for a closure below this candle to establish it as a high. So let me show you some more examples. I know that kind of sounds complicated. So watch this here. We've set a high because we've closed below, and because we've closed below, we've set a low. The lowest point after the closure is the low. So this is not the low because it's a low point that occurs before we establish a high. A high does not get established until we close below this. So once we close below this, then we look for the lowest point. We mark it out and we wait for that candle to get closed above. Now that that candle has been closed above, this is our low, this is our high. So we have a high and we have a low. We cross above this high and then we put in a high point right here. Now watch what happens. No closure below it, meaning that this high point doesn't mean anything because we didn't close below it and make a valid high. Now, as we go up, we put in another high point that finally does get closed below, which means we've now established a high right here. And after we establish the high right here, we then can establish a low. How do we establish a low? We find the lowest point of the leg prior to any closure above any of the candles that put in the previous lowest point. And then once we close above it, that makes it a low. So now because of that, we have a high and a low. So we've got a high, a low, a high, a low, and now we come up and we put in a high point here. After it can be on the same candle, so this candle closes this and establishes the low, and at the same time it puts in the highest point. We close below it, and now we've established a high right here. After this, we establish a low point right here on this candle, this low point, but it looks like we don't close below it until after we put in this new lowest point. So this one becomes irrelevant. We can go ahead and stop looking for that because we've put in a new lower point prior to closing above this low point. We put in a low point here and it becomes a valid low whenever we cross above right here. Okay, now up here, we've put in a high point and then we close below it, which validates it as a low. Now watch, this looks like a high, but watch what I'm going to explain. You can't have 2 highs in a row, right? You need to have a high and then a low, but this low never gets validated. So because this low never gets validated with a closure, this is not a high. We're not looking for closure. We're not looking to consider that as a high. None of this matters. So all we have is high, a low, a low, a high, a low, a high, and now we're looking for the low. So as we come down, we're watching price print, we see this, we think, oh, that's a low point, let's see if we close above it. Nope, we never do, so we get rid of that. We come below, we put in a low point here, we say, oh, that's a pretty low point, let's see if we close above that. Nope, we never do, so we get rid of it. Now we come down and we put in this low point, and we're looking for a closure above it. And as price climbs, once this candle finishes printing and closes, we know that this is now a valid low. Now up here, we're looking for a high. We put in this high point, see if we can get a closure below it, and then the very next candle is slightly above it. This is now our high. This is irrelevant, and we're looking for closure below this candle, and we get it right here. Now we come down, we put in a low point, we're looking for closure above it. This is a valid low. Now we come up, look, watch this, we put in a high point, and we don't close below it, so it's invalid. It's not a high. And as we come up, we do put in this high point, and we do close below it, making it a high. We come down, we put in this low point right here. We never close above that candle, so this is not a high. Same thing as over here. This is not a high. We're just going down. We put in this low point. We never close above it. This is not a low, so this can't be a high because this is not a low, because our last high or low, one or the other, was a high. So now we are only looking for a low. Coming down, no low established, so no high can be established. We come down, no low established, no high can be established. We come down, we put in our lowest point, and we finally close above it. Now this is a low. And now we are looking for a high. Now right above it, this is confusing, but pay attention, okay? It looks like we put in a high right here. And it looks like on the very next candle we close below it. But before this candle closes, it runs higher and it makes this high. See how it's above? You see how it's above? This becomes irrelevant, and we're now looking for closure below this, which we never established. Therefore, all we have is a low right now, and we're looking for our next high. And we haven't gotten one established yet. As we climb up, we're looking for a high point, and then we're looking for a closure below its candle. Here's a high point, here's a closure below its candle, here's a low point, no closure below its candle, so we have no high established. Besides this one, no low, so no high can be established. So this is not a low, this is not a high. This is a low here and a high here. Now we come down, and notice this will be something we talk about on failed highs and lows, but this is not closed above. I know it looks like it is, but when you just come up above it like this, and your very next candle gives you this drop down right here, we really don't like to consider this as a closure. We want an actual closure above it, and this just has proven to be not really valid. We'll talk about it more as time goes on, but anyways, we're climbing down here. Look, we put in a low point, and we need a closure above it to make it a low. We don't get that, so it's not a low, so it doesn't matter. Come down here, put in this low point, and then look, we close above it. Once we close above it, we then establish this high. Now we have a low, and then we have a high. As we go down, we put in a low point, but we don't close above it, so it doesn't matter. We put in a low point here, but then before this candle closes, we put in another low point, so this doesn't matter either. And then we never close above this low candle. It's not a low yet. Now we put in this low candle, and finally close above it. After we close above it, we put in a high point. After we put in a high point, we close below its candle. After we put in that candle, or after we close and establish this high, we have this lowest point, and then we close above it. And then as we come up, we have this high point, but then before any closure or anything, this high point comes along. We close below it right here. This red candle now becomes our low point, and once we cross above it, we have a low established. So we have a high, a low. We come up, we put in a high point, but we don't close below it, so it's not a high. We put in a high point, we don't close below it, it's not a high. We put in a high point, we do close below it. Now this is a valid high. Now we are looking for a low. Low point, no closure, low point, no closure above, low point, no closure above, low point, no closure above, low point, closure above. Okay, so that's how we figure out what a low and a high is. There's really no such thing as a invalid low or high. We just wouldn't even call it a high or a low. We wouldn't call it anything. We would just say that it's maybe a fractal, like from a lower time frame that we don't need to be concerned with, like on the seconds, maybe it's a high or low, but the minutes time frame and the 12 minutes and the 144, which is what we use, all hold true for us to just be concerned with this kind of candlestick structure here and nothing else. So let's go back to the next question. What is a pullback? Well, a pullback occurs along the leg of a trend. So as we're climbing up in price, when we establish a high, meaning the wick or the highest point of this leg here gets closed below, so the candle that puts in the highest point of this leg here gets closed below, this is a pullback. So for instance, this whole leg is heading up, but right here, when we put in this high point and then we close below it, this is a pullback. This is a pullback. So in this whole leg, we only got one pullback. Doesn't necessarily matter how many you get, but I'm just pointing out that in this leg, we see one pullback because we only have one valid high. Now, in the same instance, when price is going down, you can get pullbacks there as well. Look here, price is going from here to here. But along the way, we're going to stop at this low, and we know it's a low because we cross above it. We're going to put in this high, and then we're going to continue down. And so this is a pullback. You will always see highs/lows occur with pullbacks. You can't have a higher low without a valid pullback. When we refer to a pullback, it's just a general term for whatever kind of high or low we're looking for on the leg. So if we're talking about a double valid pullback, for instance, like the strategy of the invisible zone calls for, price is coming up, it gives one pullback here, it comes down, it gives one pullback here and closes below it. Once it closes below it, we believe that shorts are going to occur if we're at our higher time frame POI. We're a little bit away from it, but in this instance, your stop loss is manual. If price is to close above here, your idea becomes invalid, so you have your stop loss manually up here. And if you wanted, you could, of course, wait for the triple confirmation as well. Put a low here, we put in a high here. Now this is a triple valid pullback once this high is established. And this high is established right when this candle closes below the bottom of this high. The importance of understanding pullbacks is not just for knowing when you have a double valid pullback in the POI. It's actually important for establishing when you have a POI because you need to know what a failure and a responsible high and low are. You can't know what failure and responsible highs and lows are unless you first know what a valid high and low and a valid pullback is. So now that we've talked about that, let's jump into what is a failure high/low. The first criteria for a failure high or low is that it needs to be a valid high or low. Let me just remove these other drawings real quick. We've already established that price starting from here has been trending upwards. We put in a high point, we close below it, making it a valid high. We close above it, above the high right here, making this low a successful low. And we call it that because it succeeded at continuing the trend. This valid low here, it becomes a valid low whenever we cross and close above this, was successful at causing the closure above this previous high. Once we close above it, we now know that we can establish a high up here, making this a successful low. Or another term is a responsible low. But let's continue. Price is trending up still, and it puts in this high here. We know it's a valid high because we close below it. And after we close below it, we are looking for a low. Now, when we establish this low and then we close above it, so now when we close above this low and establish it as valid right here, we're looking to see, is price going to continue trending up, or is this low going to fail to cause another closure above this high? Now what happens? We have a low, we have a high point put in, and as soon as we see this close below, we know that this is now a failure low because this low failed at continuing the trend. We put in a low, we went low, high, higher high, low. This is still a high, but it is a lower high, which means it failed. This low failed to send price above this high. Now again, this low has just failed twice at getting up here. So now we have a failure low here, we have a failure low here, and it sends price to another lower low. And now, once we get down to this lower low, when we cross above it, price heads up, it puts in a high right here, price crosses below and closes, establishing that this is a valid high. We come down, we put in this low point here. After we put in this low point, we close above it. Now we have another low established, as we talked about earlier, and we're looking to see, is this going to be a failure low or is it going to be a responsible low? But this low here does cause the closure above the high that it came from, which makes it responsible. And if you look what happens directly after, we don't establish a high or a low here because we don't have closures above or below these bodies or these wicks of the candles. We come down down, down, and look at the low point that we put in. Though it does wick below, it does not close below, and this is what we expect. Why? Because this is a responsible low. This low caused us to go higher. So we're not 9 times out of 10 expecting it to just now get run through. We don't expect to see price run a responsible low until price fails to close above a high that the responsible low created. So yes, we do wick below it, but we set this low that does not close below this one, and then look where price goes. It goes to make an attempt on this high. In the advanced nuances, like I said, I'm going to teach about why we don't consider this a successful closure because of the way that these candles are. Knowing that, we believe that this is not a successful low because we know, based on this candlestick structure right here, that price technically did not give us a good close above the high. And what happens whenever a low fails to run the high? A lot of the times, this isn't the meat and potatoes of the strategy, but like I said earlier, whenever we make a failure low, we oftentimes expect it to get run, which is exactly what happens right here. No low, no high, because no closures, right? No establishments made there. We come all the way down and we close below this low, and the process starts all over again. I know I was talking mostly about failure highs and lows there. I did touch on the responsible low and high a little bit. I want to touch on it just a tad bit more, the responsible high and low. So let's go over that one more time with the same diagram. Well, this is actually price from today. By the way, I streamed all day, and again, I don't know how many days in a row it's been, but we haven't been losing. We've been taking great big wins. I think we took like 2 or 3 big wins today. Haven't gotten 100 points in a couple days, sadly, but I think yesterday was our best move was 55, and today was like 37. Pretty dead in the market, but I think we got a 37 and then like a 22, 23 today, and then one other small move. So not too bad. But yeah, everyone's win rates were through the roof today. It was really exciting and refreshing for me to see. Responsible lows, let's talk about them real quick, and then I'll send you on your way to the next video. We have our first pullback occur, and we see that this low is, like I said, successful at making a new high. Because it is successful at causing closure above this high, we would refer to this as a responsible low, which, if you know anything about the invisible zone, we anchor from the responsible low to the failure low, which, as you can see, we touch and we give 26, 27 points from. Pretty simple right there, of course. If you've watched the invisible zone, or if you're in my group, you're looking at it and you're just like, yep, that easy. Like it is that easy. You'll wish that you had never done anything else. But that's besides the point right now. Again, this was a responsible low because it was successful at sending price to close above the high that it came from. Some refer to this as internal break of structure. I think I say that sometimes, BOS, right? Whatever you want to call it. This low was successful for getting us up over the high that we established from the pullback. Let's talk about responsible highs. This is beautiful. You guys are going to be like, yo, there's no way this is possible. Here's what happens. We've got this successful low. We put in a high, a low, a failure low because it does not run the high. We run the failure low. We come up and we don't run the high, but we do nonetheless establish a high. Now watch what we do. This high causes the closure below this low that it came from. This high came from this low. This high was caused by this low. Now this high has just caused a closure below this low, making this the responsible high. Now look what happens. Once we put in this low causes this high to be created. This high is a failure high because, like I said earlier, it does not run the low. This high does not cause this low to get closed below. This would be a responsible high if it sent price all the way down like this, but it doesn't. Now, if you know anything about the invisible zone, you know what I'm about to draw right here. To the tick, as you can see, the invisible zone is drawn between the responsible high and the failure high. This is a responsible high because it sent price down below the low that it came from. This is a failure high because it did not send price down below the low that it came from. And we draw the invisible zone between the responsible and the failure high. I probably sound like a broken record, but I mean, it's going to pay your bills, so just deal with it for now, please. Let's just make a quick review one more time. A high or a low is only established once the highest point is closed below or the lowest point is closed above. A pullback is what occurs when we see a high get established on an uptrend by getting a closure below the highest point, or a low getting established on a downtrend by getting candle closure above the candle that put in the lowest point. What is a failure high low? A failure low is a low that is unsuccessful in causing the high that it came from to get run. A failure high is a high that is unsuccessful at causing price to run the low that it came from. Like this right here. We have a low that price came from. We have a low that the high came from. The high sends price and it fails to run it. So this is a failure high. And what is a responsible high and low? A responsible low is a low that succeeds at running the high it came from, and a responsible high is a high that succeeds at running the low that it came from. A high that succeeds at running the low that it came from. And boom, that's all the candlestick structure that you are going to need for this course. I'll see you in the next video.